Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, Vendetta Mining published a new resource estimate for its Pegmont lead-zinc project in Australia. What happens next?
Well, this resource update was a very important milestone because it reached the critical mass for an open-pittable mine using the transition and sulfide lead-zinc mineralization in this project. They have about 8 million tons of combined 7.5% to 8% lead-zinc. They would likely mine this at about 3,000 tons per day, producing about 1 million tons per annum. And that's good for about at least 6 years, enough to recover the whatever capex is required. The next step for the company is to continue its infill drilling program. It has 12,000 meters underway. It's done about a third of that. Part of this drilling is infill drilling and also a modest step out in an effort to get the total resource up into the 13 to 15 million ton range. They're currently at about 12 million tons combined open pit and underground. The underground mineralization, by the way, is about 3.5 million tons. It's also close to 8% combined lead zinc. But quite importantly, whereas the zinc is only 31% of the open pittable ore, as you get deeper, the zinc becomes a more significant percentage, almost 50%. So a 50% lead and zinc split between the two ores. Now, the company is not really thinking about developing this as a standalone mine. There are two operations within 25 kilometers of Pegmont in Queensland, Australia. One is South 32's Cannington project, which mines a big silver lead zinc deposit. However, the grades have been declining. They're producing 3.2 million tons per year, and they're actually expanding it to 4 million tons per year. So one possible buyer of the Pegmont project is South 32 to provide a higher grade lead zinc ore to blend with its lower grade silver lead zinc ore from its Cannington project. The other potential buyer is Chinova's Osborne mill, which is 25 kilometers to the southwest. And that ran out of ore and is basically on care and maintenance. It's a smaller operation than Cannington, but it's definitely it's about double what the Pegmont could reasonably produce per year. So the scenario they're looking at is a simple mining operation, starting with open pit mining and eventually transitioning to underground mining, and the ore get trucked to one of these operations. Now, normally, when you have a scenario like that, there's usually just one such party, and the junior trying to coax the other party into doing something with it, it has no other exit for its ore. In this case, we have two groups that would benefit from Pegmont. So I have a suspicion that by the middle of next year, this company will not exist. They may have another resource estimate update by the end of the year. If not, they will combine it with a PEA during the first quarter of next year, and that will pretty much show what there is that the operators could go to work on right away. The other part of the drill program that they're doing now is they're doing a series of scout holes into conceptual targets to see if there's anything interesting on the project that is there. It's obviously not going to be part of the PEA mining plan that they're working on. However, it would be of interest to any potential buyer to see that, yes, here are other mineralized zones that with additional exploration could extend the mine life beyond the 10 years you are likely to get from the combined underground and open pit resource. One of the interesting things that I saw about this news release that the company put out is I have never seen so much detail provided by a company in a news release describing a resource estimate. They put all the assumptions in there, such as smelter payables, treatment costs, transportation costs, that would allow somebody to actually do a back-of-the-napkin discounted cash flow analysis calculation for this project. So this company has set a new standard in disclosure of detail in a press release. Normally we need to wait 45 days for the technical report, and then the technical report can be anywhere from 200 to 500 pages, and you got to poke around and find buried in there all these basic assumptions. So this company, I congratulate them for putting all this information into a news release, which allows people like myself to put together a crude preliminary cash flow model for what the PEA might look like down the road.
We'll have more Discovery Watch with John Kaiser right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Lorraine Copper announced a farm-out deal for its Lust Dust project to a private company. Is this a good deal?
This is a potentially good deal, but there are some aspects of it that I hope get modified before the final agreement is signed. This is a letter of intent for the Lust Dust project, which the company acquired last year for about 5 million shares from a junior that over the past 15 years had spent $10 million drilling a skarn deposit of zinc, copper, lead, silver, gold mineralization. Did not produce a large enough resource to be developed as a mine, but it is a carbonate replacement style system, and given the sort of history of the previous operators, they may not have used the best geological models in tracking down where this mineralization all ends up. And this is where Lorraine Copper, Glenn Garrett, and Bill Morton, they took over this project with the idea of let's digitize all the old information. Let's start thinking about it in from a fresh perspective, and see if there's a lot more here to be found than the previous operators did with their $10 million over a period of 15 years. Now, the deal that has been announced appears to be a 70% farm out to a numbered company that is within the Oxygen Capital group. And Oxygen Capital is Mark O'Day and Don McGuinness, and also Cal Everett's in the background. One of the companies in their group is Liberty Gold, which is used to be called Pilot Gold and is working on the Kinsley Mountain project, as well as the Gold Strike project in Nevada and Utah, as well as a number of projects in Turkey. And Cal Everett is the CEO of that company. So the goal appears to be that they want to take this private company public with Lust Dust as the flagship project. They can earn 70% by spending $6 million by 2021. And this is a strong group that has had quite a few successes in its track record. Mark O'Day's big success was the $2.3 billion buyout by Newmont of Frontier, which had the Long Canyon deposit. And my feeling is they will use this to raise an awful lot of money, get this project going, and this would be a good deal for Lorraine Copper because in the beginning, this numbered company, when it's public, its market cap would represent 70% of the value of the project. And so one could see Lorraine Copper coattail on whatever promotion they mount and whatever success that the Oxygen Capital Group is able to muster for the Lust Dust project. But there is a hitch in the way that the company has written the news release. It says that the deal is such that at the end of the day, Lorraine Copper will get enough shares to end up with 30% of the company that owns the Lust Dust project. And that presumably is this numbered company when it's gone public. This type of deal is not very popular with the regulators, so I suspect it may not fly. But it also creates the risk that the market will be unable to really price Lust Dust net 30% interest in this project, because the other company could end up acquiring other projects that could become the priority. They do have 4 years to spend $6 million, so they could spend the firm amount in the first year and then just put it on hold. So it is not, in my view, the best way to structure a deal. So I'm hopeful that they will iron this out when they get down to the details, so that in a manner similar to what happened with Scandium International and its Ningen project, where the 20% project owner had the option to negotiate selling the 20% interest to Scandium International for equity in the company. Hopefully they structure this Lust Dust project in a similar way where Lorraine Copper has the choice of staying with 30% or putting it to the public company run by Mark O'Day's group. And the reason this is important is because Lorraine Copper has 49% of the Lorraine Jajai project, which has a copper resource in it at about just under 0.5% copper and a little bit of gold. But the other partner is Teck at 51%. And about 1.5 years ago, Lorraine Copper, in the pit of the bear market, had a tentative deal to acquire the 51% back from Teck and go in there with its own group and try and find something more than Teck was able to find while it had the project under option. And of course, when you have a stock with about 25 million shares issued trading at 6 cents, you don't have a lot of leverage to do a good deal with a company like Teck, which historically has not given away projects for a song and dance. So the idea would be if Lorraine Copper could get value for its Lust Dust project, its net 30% interest, courtesy of the Oxygen Capital Group's sinking $6 million to advance in this, they could get a bigger market cap that would enable them to do a win-win deal with Teck, pull the 51% in, and turn the Lorraine Jai project into the flagship for which $5 million plus gets raised, and a serious exploration program mounted to show that this mineralized system is a lot bigger and better than it has so far shown to be. So it remains to be seen if they work out this deal in a term where Lorraine Copper can get the value from the value that the Oxygen Capital Group is going to get from promoting and exploring the Lust Dust project.
Discovery Watch will be right back after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with John Kaiser. John, earlier this week, you went on a site visit to the Stibnite project of Midas Gold Corp. What did you find out?
Midas Gold has been a recommendation of mine for several years. It's my top gold pick. I have treated it as an optionality play. It doesn't take a big move in the price of gold to put this company into the money. But the knock against the company has been that the Stibnite project is in the middle of Idaho, surrounded by a wilderness area, and that it will never get permitted because you have two groups very active in Idaho. One are the recreational use groups, and then the other are the professional NGOs, which are against mining in any case. So the concern in the market has been this project will never get permitted. It's supposed to be an open pit mine, which means, of course, maximum visible change that you will see. However, the company has presented this as really a reclamation project funded by a gold and antimony mine. And the reason is that in the late 30s, during World War II and until the end of the Korean War, this was the primary source of antimony for the United States. Antimony normally comes from China. Even today, it's 80 to 85% of global supply. But when Japan invaded China in World War II, that supply was disrupted. And then, of course, when the conflict between North and South Korea, backed by China, took place, then, of course, antimony wasn't coming to the United States either. So when there was a strategic defense reason to mine antimony from the Stibnite project, the environment was the roadkill. They literally destroyed the Salmon River as a salmon spawning area, and by making an enormous pit that basically changed the whole landscape so that even though the fish today can still swim into the pit during the fall spawning season, they cannot get upstream because there isn't enough water. It is too rocky. It is too messed. So this entire valley that's upstream from the old yellow pine pit is no longer accessible for salmon spawning. And of course it was made worse by subsequent gold miners who operated heap leaches, and the spent ore they dragged up into the valley. And of course this was they put it on top of tailings that had been spread all over the valley. So now you have like 10 meters of tailings and another 30 meters of this crushed rock that really it's benign because it's already been leached clean of much of its mineralization. But the tailings that sit at the bottom of this pile, it leaches and leaks into the river, so you get high arsenic and antimony levels in the salmon East Fork River, and that of course isn't good for fish populations. So a reason I went on this site visit is I wanted to see for myself, what does this disaster area really look like? What is the company going to do to turn this around? And is this something that will likely get the recreational use and the environmental NGOs on side and approve this project? And I have to say, I was very impressed by the explanation Stephen Quinn and his team gave of what they're all planning to do. They're going to literally build a tunnel through it, which the salmon will swim to bypass the old pit. In fact, the old pit's going to be expanded into a much bigger pit. The entire valley will have all the old spent ore dug up and moved to create a proper tailings storage facility. The tailings themselves will end up being reprocessed. That whole reclamation part of this billion-dollar capex, it's going to cost about $100 million. So the first $100 million that goes into this project, if it gets permitted and the mine construction decision is made, this will go to restore this valley to some semblance of what it was in the past. And of course the open pitable stuff will run for anywhere from 10 to 20 years, and it'll eventually be reclaimed. But in the long run, it'll switch to an underground mining operation. So I'm impressed. I think this project will get permitted, and talking to all the locals in that the work that Midas Gold has done to explain what it is doing, and of course the reality is it's not quite horrible enough for Superfund status so that the government is obligated to pay for it. It is something that nobody will ever clean up unless it actually is funded by a gold and antimony mine.
Why is the antimony byproduct credit important?
In the current mining scenario, the project would produce 4 million ounces gold over 12 years and 100 million pounds of antimony. Antimony is used primarily as a flame retardant, and of course the most familiar use for most people is in clothing, so that your clothing is not flammable. Of course, China makes much of the world's clothing, and we import that, and so the antimony goes direct from its mine to its various manufacturing facilities and then exported to the rest of the world. But it also goes into bullets, into munitions, because the flame retardant aspect of antimony causes the explosion when the gun is fired to be delayed sufficiently to in the process create a much bigger punch for the bullet. So tin is an alternative for it, but tin is more expensive and has its own supply issues. So antimony is used by ammunition makers around the world, and so of course that gives it a strategic status from the military perspective. But the problem that's coming with antimony is that China's mine is being shut down. It all comes from one district in Hunan. Last year, production was down 50%. It's fed also from a number of smaller mines in this district, which China has been shutting down as part of its environmental awakening. So there is a concern that in about 3 to 5 years, there will not be any antimony coming out of China for export. And of course, if they are operating at a much lower rate, they will likely impose restrictions, export restrictions, to make sure that their domestic industries are not affected negatively by the lower supply. So for the United States, it's becoming a strategic problem because its annual consumption is about 25,000 tons out of the 200,000 that the world consumes annually. The stibnite mine would produce about 8,000 tons at the current planned production rate. But one of the things that I learned while I was on this trip is that the recent drilling has helped them understand that there are vein sets of antimony that are antimony enriched that extend beyond the gold mineralization into the surrounding country rock, and which could be pursued through underground mining. So if this mine were to be built, a big open pit operation, there's a number of high-grade veins, and of course the gold tracks this also, that underground mining could pursue into the surrounding rock and produce a much larger amount of antimony if it became necessary to do so. So approving this project gives the United States a hedge against the possibility that either because China's environmental program is actually getting traction, or because there is a geopolitical conflict that makes China not want to export any antimony to the United States will have a expandable domestic supply, baseload from the gold mine itself, and expandable from chasing the high-grade antimony veins into the surrounding rock.
Midas used a $1,350 base case gold price for Stibnite's feasibility study. Gold today is about $100 lower. If Midas got a permit tomorrow, would a mine be built?
As the pre-feasibility study stands, it would not be built. The standard sort of definition for whether to go ahead with a mine when there's not a strategic reason involved is that the net present value using a discount rate deemed reasonable should be equal or bigger than the capex. The capex for this project right now is almost $1 billion. And the NPV, even at the $1,350, was not that particularly great. It was about $873 million using 5%, but only $508 million using 10%. And a producer is going to use something between 5 and 10%, not 5%. At the current gold price, it is lower. It's only like $700 million at 5% and just under $400 million at 10%. So well below the threshold. The IRR, internal rate of return, is still good. It's about 24% at the base case price. And at the current price, it's still about 21%. You like to see 15% or better for the internal rate of return. However, what the company is doing right now is, I think, going to change it from being an optionality play to being a fundamentally undervalued project. When the company moved from the preliminary economic assessment to the pre-feasibility study, the consulting firm, the engineering firm, refused to consider the historic holes that were part of the PEA. And the grade and mineralization provided by those historic holes enabled a very big blast of cash flow right up front during the early years, where if this still existed, the project would be viable. It would likely reach those thresholds, those minimum thresholds that I described, even at today's price. So the work the company has been doing is infill drilling, and they've also realized that the sort of the orientation of the antimony veins was not properly understood. So they're starting to drill from an angle that properly measures the antimony content. And so we will probably see anywhere from 50 million to 100 million pounds of antimony come back into the resource, and probably also a couple million ounces of gold come back into the resource, and a good portion of that will be up front. So an important milestone to watch for is an updated resource estimate at the end of this year, which will allow people to see, the ore schedule is strong again. We can run our cash flow models. The costs are not going to change very much since the PFS was put out in 2014. And based on what I saw on the project in general, I think a mining permit by the end of 2018 is very, very plausible. And in any case, there is still the optionality where right now the stock's 70 cents and the market's saying it's never going to get permitted, and even if it gets a permit, it's never going to be built. But a mere 20-25% move of gold from $1,240 to $1,600 puts it way in the money. It passes all the thresholds. And then based on the 343 million shares fully diluted, you're looking at a $3 to $5 stock price based on it moving into that direction. And if we just go to the current stock price or gold price, we would see a stock price in the $2 to $3 range. And once a permit's in place, one of the big producers with experience with refractory ore, either Newmont or Barrick, would likely make a bid. Unlikely until the permit's in place, because if one of the big guys gets involved, then all of a sudden the permitting hurdles ratchet up to a new level. So this is one of my favorite recommendations right now. I think it'll be in the money by the end of the year, courtesy of the work being done this year. And I think the anxiety about it ever getting permitted is misplaced. This is a mine that should be permitted and put into production, because it will restore this valley to being a salmon spawning ground again, and it will put the United States in a position to at least have a partial relief from absolute dependency on Chinese antimony supply.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. Discovery Watch will be back next week. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.